I bet you didn't know about Trump's 2025 tax time bomb. Join Money's Smart Basics as we dive deep into the looming tax time bomb and see if his top advisors are really prepared for what's coming. You won't want to miss this. Please remember to like, subscribe, and comment for more Money Smart Basics videos. Stay until the end to receive a bonus tip. If you have any suggestions for financial literacy topics for our next video, please leave a comment. Remember the Tax Cuts and Jobs Act, or TCJA? Passed in 2017, it brought a wave of tax relief for Americans. Lower income tax rates, a bigger standard deduction, and a juicier child tax credit were just the tip of the iceberg. But here's the catch. These sweet tax breaks are set to expire at the end of 2025. That's right, folks, the clock is ticking. Uncertainty reigns in Washington. Will Congress extend these tax cuts? Nobody knows for sure. The future of your wallet hangs in the balance. That's why it's crucial to have a plan, to be prepared for whatever comes next. Don't bury your head in the sand. Financial advisors are already hard at work, crafting strategies to help folks like you navigate this uncertain terrain. Their goal? To minimize the potential blow of higher taxes and keep more of your hard-earned money in your pocket. Remember, failing to plan is planning to fail. Now is the time to take action and secure your financial future. Let's talk about estate planning. It's not just for the super rich, folks. The TCJA doubled the estate and gift tax exemption. You can shield up to $13.61 million. But this could be slashed in half after 2025. Smart advisors use trusts and strategic gifting. Estate planning is about peace of mind. If those Trump tax cuts vanish, we could be looking at higher income tax brackets in 2026. Not a pretty thought, right? But you still have time to take advantage of the lower rates while they last. Pay taxes now at lower rates, or risk higher rates later. Which option sounds better to you? Consider accelerating your income. Pull income into 2024 and 2025. Strategies like Roth IRA conversions or recognizing business income sooner. Minimize your tax bill and keep more money. Time is of the essence. Don't wait until it's too late. Talk to a trusted advisor today. Here's a tax tip they don't teach you in school. Sometimes it pays to delay gratification. That's right, I'm talking about deferring deductions. See, the standard deduction, that magical number that reduces your taxable income, is also slated to shrink after 2025 if those Trump tax cuts expire. So what's a savvy taxpayer to do? Deferring certain deductions like charitable donations could be the answer. Instead of taking the deduction now, consider postponing it until after 2025, when that standard deduction might be lower. Why? Because a lower standard deduction means itemizing your deductions might make more sense, potentially saving you more money come tax time. Think of it like this. You're strategically shifting those deductions to a time when they'll pack a bigger punch. It's all about maximizing your tax savings, folks. Of course, every situation is different. Before you make any moves, it's essential to talk to a trusted tax professional. They can help you determine if deferring deductions is the right strategy for you. Let's talk about retirement, folks. Specifically, let's talk about Roth IRAs. These retirement accounts are like gold, especially in times of tax uncertainty. Here's why. With a Roth IRA, you contribute after-tax dollars. That means you pay taxes on your contributions up front. But here's the kicker. When you retire and start withdrawing that money, it's tax-free. That's right, Uncle Sam can't touch it. Now, how does this tie into the potential expiration of the Trump tax cuts? Well, if those tax rates go up in 2026, converting your traditional IRA to a Roth IRA now could save you a bundle in taxes down the road. Think about it. You'd be paying taxes on the conversion now at the current lower rates, rather than potentially paying higher rates in retirement. It's like locking in those lower rates for your retirement savings. Of course, this strategy isn't for everyone. It depends on your individual circumstances, your risk tolerance, and your long-term financial goals. That's why it's crucial to talk to a financial advisor who can help you determine if a Roth IRA conversion is the right move for you. Section 6. Business owners beware. Maximizing income under the setting sun of TCJA. If you're a business owner, listen up. The potential expiration of the TCJA has big implications for your bottom line. Remember that sweet 20% qualified business income deduction? Yeah, that's on the chopping block too. That means you need to be proactive. Now is the time to talk to your CPA and explore strategies to maximize your income while those lower tax rates are still in effect. This could involve accelerating income recognition, deferring expenses, or taking advantage of tax credits. The key is to be strategic and plan ahead. Remember, knowledge is power. The more you understand about the potential tax changes on the horizon, the better equipped you'll be to make informed decisions for your business. Don't wait until it's too late. Start planning today and protect your hard-earned business profits. Section 7. Charitable Giving, a strategy for tax savings in a changing landscape. Did you know that charitable giving can be a smart tax move? It's true. When you donate to qualified charities, you can often deduct those donations on your taxes, reducing your taxable income. But here's the thing. With the potential for a lower standard deduction after 2025, those itemized deductions, including charitable donations, might become even more valuable. So what does that mean for you? It means you might want to consider bunching your charitable donations. This involves making larger donations in certain years rather than spreading them out evenly over time. For example, you could make a larger donation in 2024 or 2025, while the standard deduction is potentially higher, and then skip a year or two. This strategy could allow you to itemize your deductions in those bunching years, potentially maximizing your tax savings. Of course, it's important to remember that charitable giving should always come from the heart. Don't let tax benefits be your sole motivation. But if you're already planning to give, why not be strategic about it? Section 8. The Unpredictable Future. Navigating the choppy waters of tax policy. Let's face it, the world of tax policy is about as predictable as the weather. Just when you think you've got it figured out, the rules change. That's why it's so important to have a trusted financial advisor in your corner. Someone who can help you navigate the ever-changing tax landscape and make informed decisions for your financial future. A good advisor will stay up to date on all the latest tax law changes and keep you informed about how those changes might impact your personal finances. They'll work with you to develop a personalized financial plan that takes into account your unique circumstances, your goals, and your risk tolerance. Remember, you don't have to go it alone. There are experts out there who can help you make sense of it all and keep more of your hard-earned money in your pocket. Section 9. The time to act is now. Secure your financial future with expert guidance. The potential expiration of the Trump tax cuts is a wake-up call for all of us. It's a reminder that we can't afford to be complacent when it comes to our finances. We need to be proactive, informed, and prepared for whatever the future holds. Don't wait until it's too late. Talk to a trusted financial advisor today and start planning for your financial future. Remember, the best time to plant a tree was 20 years ago. The second best time is today. Congratulations, you made it to the end of the video. With that, you are ahead of 90% of most people in America. Here is the bonus tip that we promised. Will Trump's 2025 tax policies change everything? Stay tuned as we dive into the potential impacts and what you need to know. Expect extended tax cuts, new brakes on tips and Social Security, but watch out for increased tariffs on Chinese imports. Keep an eye on deductions, as they might be significantly altered. The information in this video is for educational and entertainment purposes only, and is not intended as financial advice. We are not financial advisors, and the content should not be construed as professional financial advice. Always seek the advice of a qualified financial advisor or other professional regarding your specific financial situation. The use of any information provided in this video is solely at your own risk. Please remember to like, subscribe, and comment for more Money Smart Basics videos.